Good morning. Up now, we have Managing, Sourcing, and Manufacturing in a Turbulent World, being presented by Steve Reece. Steve?
Hey guys, good morning. Just give me a thumbs up if you can hear me okay. Excellent, that's a good start. Next thing, I'll try not to break the technology here. So thank you for coming along. What else would be more fun at 9:30 on a Sunday morning than talking about sourcing? I appreciate your diligence in being here. I'll do this bit really quickly, just about me. This is actually my quarter century anniversary since I first came to this show. I guess I'm a lifer at this stage. Don't hold it against me. I'll save you the rest of that detailed background. I came from Hasbro. The only thing I'm professionally qualified in, believe it or not, is market research. But those skills have become quite important in this topic, as I'll explain to you shortly. So to get straight into this, what are the priorities that companies have when it comes to sourcing for toys? Normally, the first question in a conversation is, can we save money on manufacturing if we switch a factory? And that's understandable. Depending on the product category, you might be spending a third of your revenues on manufacturing. So obviously, you would want that to be cost effective. That's normally where people start. But actually, there's a presumption before that, which we take or have taken very much for granted. And that's basically that production capacity is actually the more fundamental driver and the biggest risk factor that a toy company faces. If you haven't got the inventory, you're not really in business. So as I say, if you can't make them, you can't sell them. The thing is, we've taken that capacity for granted for most of our working lifetimes because China has been such a fantastic major global sourcing hub for toys. Just to talk about China, so the China of my childhood, what you saw of China on the television in my childhood in the 80s was the picture that you have there on the left, which is, a lot of people in very similar, I guess, peasant-type clothing, and bicycles, no cars, no vehicles. China came into the world of manufacturing with a desperately poor labor force, many of whom were actually literally starving. So they came in with a lot of hunger to work and to earn a living so that they could basically, stay alive almost. And so the thing is, toy production, because our products come and go so much, they don't stay in the market. Most of them don't stay in the market for more than a year, or if you're lucky to. There's not a great opportunity to automate traditionally, because automation requires things like you get with automobiles, where you're going to have the same car in the market for 5 or 10 years. You can automate that and make that really efficient. But if you're going to make 50,000 units and then move on, you can't really automate. So labor is a huge component of toy manufacturing. And that's why China was such a gift to the toy industry, because you had hundreds of millions of very, very poor people desperate for work. The reality, though, as many of you who go to China will know, is that China's changed a lot in that time. So the China of our childhoods is now the China you see represented by that glittering metropolis. Now, I'd argue that if you were looking at China today, you would say it's more suitable for producing, real cars than toy cars. $3 or $4 items are really not going to be great for giving people in China the standard of living they require now. I was talking to a toy factory owner in Nuremberg who told me he's now paying $1,000 a month for production line labor. That's a lot compared with where it used to be. And the things that changed, again, we don't need to go into all the data here, but just look at the trend lines, right? So the ones on the left-hand side which relate to poverty, you can see a huge reduction in poverty in China over time. And you can see a huge rise in the size of the Chinese economy on the right. And to be honest, I'm going to get into some politics later in this presentation. I'll leave it till the end so that I can run if anyone gets too hostile over that. But basically, this is a good thing for all those Chinese people who would otherwise have been so kind of poor, frankly. But it's not just the changing economy, which means that China is now not necessarily going to be the sole major manufacturing hub going forward. It's demographics. Okay, so on the left-hand side here, you can see the population pyramid of India, which, apart from the first age 0 to 4, is basically what a healthy population pyramid looks like. It's a pyramid, right? That's the whole point of the name. Whereas China's is more like, I don't know what you would call that, but it's kind of like that shaped, and that's a problem. And if you look at the data, the UN predicts unless the birth rate changes in China, by the end of this century, the population might halve or even more. So there's obviously a demographic challenge there. There's a quote there, most of the workers in the factories are now in their 40s and 50s. Young people in China now aspire to more than doing repetitive production line jobs living in a factory. And the final bit of data on that chart suggests that nearly 30 million manufacturing jobs in China will go unfilled. So there is a problem here. Both there's a problem because China aspired to move on and up in terms of what they were actually producing, which they've achieved. High tech is more the thing. But also, just are there going to be enough people, and are they going to be cheap enough for us to ask them to help us make toys? And the answer is probably not. And the only question is when does that reach a tipping point? That's the data I already shared, so I'm going to move on just for the sake of time. So one thing I'm definitely not saying, I'm not saying that China's leaving the toy business. I'm also not, like many people might, but I don't approach this from an anti-China perspective. I just approach it from a pragmatic commercial perspective. So China is definitely not leaving the toy business. It's still the second biggest toy market for a start, despite that dropping birth rate. Items which can be automated, China will still make a lot of sense. So, for example, I noticed the gigantic Rubik's Cube in the foyer. Rubik's Cube, which sells millions of units every year for decades, that's the kind of thing you can automate. So it would logically make sense that China would be competitive on that type of product. And then the third trend is, a lot of those factories who have some expertise in toys are going to try and move from being contract manufacturers and OEM suppliers for us guys to maybe trying to compete with us to become brand owners. That's a journey in itself. Some of them will succeed, probably more won't. But definitely the one thing that I would just want to say before we go further into this presentation is, you can't avoid China for production right now. So there's this number of 80% of toys today are still manufactured in China. I don't know where the source of that is. I've quoted it a lot of times, and I've seen a lot of people quote it. And I know from trying really hard for more than a decade, it's really hard to find accurate data. But I think it resonates. It makes about sense, right? Maybe about 80% of toys are still produced in China. So we can't forget China. China is not irrelevant. It's still the core of what we're doing. But frankly, we probably passed the peak of China's toy manufacturing, even as long as a decade back. So where's the evidence for this? So this is just one guy telling you this stuff. Let me give you some hard evidence. Again, data on this topic is quite hard, so some of the things I'm going to show you, I'd prefer to have more up-to-date sources, but I've only got what's in the public domain to share with you. Sorry, it's... Okay, sorry, there's an extra slide there, sorry about that. So where's the evidence? So going back a few years, Hasbro's previous CEO announced that China would only account for 50% of production by 2020, and that's 5 years ago. Spin Master said a kind of a very similar thing. If you look at the bottom of the chart there, Hasbro's vendors in China went from 48 in 2018 to 33 in 2023. That's a really significant reduction in just 5 years. On the right-hand side, hopefully you can read that, but basically this is a quote from Mattel's CEO saying that 50% of products made in China, that's a year or two old. They actually, Mattel spoke in their full year 2024 earnings release and earnings remarks. That's actually down to 40% now. So here's the thing, you may not see this gigantic shift, but it's happening. And the reason why these massive companies are seeing this first is, if you come to me and you say, I want to move $1 million of production today, might not be today, but we can do that quite quickly. But if you come to me and say you need to move $1 billion, that's going to take time, probably a decade, which is why these guys have been about a decade, I guess, above the curve of smaller companies. I don't know how much detail you guys want to go in this. Time-wise, I won't go into too much detail, but there are a few things I'm going to call out on this slide. So this is, just to be really clear, this is all public domain data. There's nothing here I'm sharing that's proprietary. These are published, and that is why you'll see that Mattel's dates for the data there is 2020, because that's the most recent I can find. What you see from Mattel is they're relatively diversified, but they do seem to have quite a lot of Chinese factories. It's slightly misleading because actually some of Mattel's biggest factories are their own factories outside of China primarily, which is driving that 40% figure. So the biggest factory for Mattel is in Mexico. And they have long-term factories making things like Hot Wheels and Barbie in places like Thailand and Indonesia. Hasbro is possibly more interesting because they don't own their own manufacturing. So what you're seeing here is pure contract manufacturing, pretty much. And yeah, again, you can see like a gigantic shift there in terms of China. In India, Hasbro went big early and tried to develop a lot of factories, and then they pulled that back slightly, so they have a core of factories there now. Vietnam's obviously grown, and you'll also find that they have quite a lot of local manufacturing, some of which is either because of import tariffs and regulations. I'll talk about tariffs more later, quite topical. But yeah, so there's some data there which suggests also that this is happening. Lego, again, a relatively unusual company in that they own their own manufacturing entirely, pretty much. They've got 2 new factories, and the factories are not in China, the new ones. It's in Vietnam, and it's in the USA. So they are committed to manufacturing in or near to the market. To be quite honest, though, I would say that Lego would be not a great example to take because, none of us have their brand margins and their opportunity to maybe take slightly higher manufacturing costs closer to market. This is the risky bit, okay? So I'm just going to check for the exits in case anyone gets hostile at this point in time. So I'm going to keep this, although it's geopolitics, it's non-political geopolitics. I don't care about, sorry guys, but this English guy doesn't care about US domestic politics. I'm just going to literally look at what I think is going to affect sourcing and what isn't. So, no surprise to you, geopolitical tensions have increased. And this is now like a major concern. It used to be we worried about tooling costs and, product development timelines, but now we're looking at geopolitics because we have to. Many companies are looking beyond China for geopolitical reasons. The whole thing about friendshoring and nearshoring is definitely more prevalent than it was maybe 10 or 15 years ago. But it also comes from the retail side. So big retailers, I don't know exactly, I haven't checked today, but like Walmart's market cap is like $600-800 billion. So that kind of company is driven by people who are looking for what will stop them maintaining that business and growing it as much as the stock market expects. It's a risk-averse business by definition. And if you think we have a problem with if you can't make it, you can't sell it, then they have a bigger one because no inventory means they're not in business either. So I mentioned Walmart because they publicly referenced this. They're really pushing to get suppliers to manufacture more outside of China, just from a risk reduction perspective. That's before anything actually happens, right? But what if? So what happens if there's a military crisis or a blockade in the Taiwan Strait? Now, I don't know how much you guys follow this kind of stuff. Sadly, I'm a bit of a geek, so I follow it quite a lot. And look, the reality is there's a genuine possibility that, and Xi Jinping has stated that China will reclaim Taiwan one way or another for China. Now, what happens in that circumstance? Now, this is the part of the presentation where, due to the nature of the current US administration, what might have been the right answer when I finished writing this a week or two back might have slightly changed, right? But the thing is, it's not likely to be met with no response. So let's say something happens as a blockade or even as like a military operation. At the very least, shipments are likely to be disrupted because a lot of trade is coming through that space. But what if there's tariffs? What if there's embargoes? There's likely to be a big reaction, and that would lead to massive demand for capacity and production elsewhere. And the reality is that 80% of current production can't be replicated quickly in other places, which is why I'm saying to everybody, you don't want to be behind this curve, you want to be ahead of it. You could easily end up again with container ships in the wrong place, which sounds like the least of the world's problems in this circumstance, but we saw what carnage that created in the marketplace. So I think, regardless of the actual risk of this happening, which we can all debate, and everyone might have an opinion, people, especially if you're a stock market listed company, you're now being driven by the risk, not by the actual reality. And so diversification is accelerating outside of China for these kind of reasons. Yeah, this one is definitely out of date because, like I say, I wrote it 10 days ago, and it seems to be an ever-changing feast, this one. So I'm going to avoid completely what happens when you put tariffs on products. Does it lead to inflation and reductions in demand? Because that's for another presentation another day. But as far as sourcing is concerned, what this whole situation with tariffs and threatened tariffs and potential tariffs does is it just increases uncertainty. And in times of uncertainty, the way that prudent businesses deal with that is to basically diversify. So it kind of supports the same direction. One thing particularly here for China is, at the time I wrote this, we were looking at 10% tariffs on China. We're now at 20%. China's, unlike, I guess, a lot of these other countries who are going to, I guess, play ball with this whole conversation and approach, China are going to compete. They're not going to take it in a, okay, let's see what we can work out type of way. They see themselves in a strategic competition with the US from a geopolitical perspective, so they're always going to respond. Since Trump term 1, China's deliberately and specifically reduced its reliance on exports to the USA to reduce the power that a US administration that's hostile to China has. You can see the chart there from the BBC. It's something like from nearly 20% down to about 12%, which is a very significant reduction in that space of time. I think the conversation with Canada and Mexico is different. Also, I'm going to park Canada. Apologies to anyone from Canada out there, but in manufacturing terms, it's less relevant than Mexico. The thing is with Canada and Mexico, and again, this is my opinion, you can disagree, but they're much more likely to yield to US strength because of the size of the market, the size of American power in this hemisphere. So I think actually in the end they're more likely to be able to try to mitigate some of these tariffs than probably China are. But the reality is a lot of people have moved some production to Mexico in recent years. Mattel have got their biggest factory there, Lego has a factory there, I think MGA have a factory there, etc., etc. So that's going to be a major problem. But frankly, it's just one of quite a lot of major problems when you look at this area right now. It does create uncertainty. So if you're investing in infrastructure for a factory, it takes time. It takes time to get the funding, it takes time to get the planning, it takes time to build, it takes time to build the workforce. And when you've got short-term uncertainty, you basically just put the brakes on. So I wouldn't expect there'll be that many people aggressively expanding their production facilities in Mexico at the moment, right now, versus maybe where we were a few weeks back. Okay, we got through the politics section, and I'm still intact, so that's good. It's going to get slightly less contentious now, thankfully. So then the obvious place we go next is, if China is still part of the mix, but a lesser part of the mix, what happens next? Okay, where are the other hubs? And the challenge is there isn't really a perfect alternative. So I'm going to start with that slightly underwhelming fact. Okay, I also need to qualify all the data on this chart, as everyone takes pictures of it. Make sure you remember this qualification as well. Some of the bits, especially on the bottom of this, are educated guesstimates. On the top, some of the data is a little bit out of date because it's just hard to find this data. And also where it's how can I say this without, I'll just say it out. Some central governments may manipulate figures. Is that a surprise to anybody? Probably not. So the exact figures, who knows, right? But this is as best as I can get it after quite a lot of time studying this. So if we look at China first, export toy value, basically most of them. Massive population, massive workforce, and a huge array of factories and also supply chain. The problem is what happens next after that. So in terms of competing on population and available workforce, only India can possibly compete. And India also, by the way, is the only one of the alternative hubs that really has the ambition, the aggression, and the industrial base to develop its own supply chain. But there's some challenges with India, which I'll go on to, which explains why we're at 0.3 billion versus 34 billion. Vietnam is proven to be quite a good hub. It's relatively full. It's a much smaller country in terms of population and workforce. There are some really good factories there, some huge factories. All the big toy guys are there in force pretty much. The challenge is, you can't just keep filling a smaller country. It can't possibly compare, right? The other challenge you have is we found out during COVID when China had really harsh COVID lockdowns and the factories couldn't produce and Vietnam was open for business. It wasn't really, because in effect, you're kind of getting for most, not all, but for most of the Vietnamese factories, you're getting a Vietnamese postcode on the customs documents made in Vietnam, but a lot of the supply chain is obviously still coming from China. So you're not truly diversified, but if you want to tick the box, yes, we're definitely diversified, well, that's a way to do it. I'm just going to skip, although this will be annoying visually, from Vietnam to Indonesia, because Indonesia is kind of like the new Vietnam as far as Chinese factory owners are concerned. So Chinese factory owners, honestly, a lot of them have been to India, and culturally the difference between those cultures is so huge. Chinese factory owners are not probably going to be aggressively diversifying there. But Indonesia they see as a place where there's government support, it's geographically close enough-ish, and wherever else can they really go? And again, what you're going to get is the same management as you've had for 30, 40 years, all that expertise and engineering nous, limited local supply chain, so you're still going to need to import a lot of components. The two in the middle, Mexico is probably the most significant in terms of long-term potential. We've kind of been through some of the stuff on that, and I'm going to come back to that in a bit later. But before I show you the next slide, just bear in mind, some of this data is 5 years old, and it's changed, and more production has ebbed away from China in that time. But also bear in mind that some of my figures here are estimates. But anyway, I'm going to do this anyway, just to visually get this point across. China still dominates today. I actually suspect if you did that with 2024 numbers and you had accurate ones, the non-China part of that segment would be much bigger, but not like hugely bigger. But the reality is, today you can't avoid China. But if we came back into this presentation in 10 years' time, I expect it would probably be like 40% or 50% for the whole industry outside. So what that really means to me is like 10 years of extreme turbulence in the function of sourcing for you guys. Sorry guys, but there's no avoiding it. Excuse me. I think one of the other points to make, and this is like, when I make these points, I make it from kind of like a slightly more strategic perspective. So sometimes people look at slides like this and like, Steve, I went to South America and there weren't many factories. That's not my point with this slide. The point I'm trying to make here is North and South America has a big population. Mexico alone has a population that's bigger than Vietnam. There's an abundance of cheap workers in this hemisphere. So if we wanted to, we would just need to build the plants, and we could debate and argue, and market dynamics would suggest they're going to be here or there. But actually, like longer term, in the US, you guys have a lot of innate strength in this area. So although it's going to be really, really turbulent, if you had to, you could probably ramp up quite quickly in some of these countries. Yes, it's disruptive. Yes, there's all kinds of challenges in those countries, but there is in every other alternative. So all I'm saying is the next 10 years is going to be quite tricky in this area, but there are some innate advantages you have here compared with, if you're in Europe, for example. Excuse me. So, what do you actually do about all this? This is not something I've created. It's kind of self-evident. So, what are your options? Option one, I would describe as like the ostrich with a head in the sand approach, which is China works perfectly fine for us. There's no friction. The costs still look okay, and we're just going to stay there. And I see quite big companies publicly announcing this. And the thing is, that's an easier life today, but it's not a risk-free life, right? So, I can buy a state-of-the-art television, and I go and buy whatever is the most expensive car I can possibly stretch to today, and have a great time. But it doesn't mean it's a prudent thing to do. And that car will run really smoothly and whatever else. Like this is currently what a lot of companies are doing, possibly even the majority of companies, but that doesn't mean it's a prudent thing to do. The one absolute thing, if you are going to pursue or stay with option one, that you should do is go and qualify some factories in other countries and put a couple of smaller evergreen products in there with duplicated tooling and just leave it running. So that if you suddenly had to ramp up, you're aware of the locality, you know how the customs works. Basically, if you suddenly have to scramble, you're a million miles ahead of someone who hasn't. But I wouldn't advise option one. Option two is now kind of like the standard strategy that I see for small to mid-sized companies. I've probably spoken to maybe 400 or 500 companies about sourcing, and this is kind of like a standard today. So you can choose, is the +1 Vietnam, is it India, is it Mexico? Because what you can't do is, if I'm a big company, I can go and set up an office in any country I like, and I can have 50 people in it. So I just have a lot more opportunity because of the scale of the operation and the budgets. You also have to be practical if you're smaller. And historically, we didn't put a lot of management time and resource into sourcing. We basically took a lot of it for granted. And option number three is like big companies, strategic diversification. Well, that's what these big companies have been doing for a decade or more. They're going to use multiple geographies. They're going to use duplicate tooling. They're just going to basically try and reduce the risk of disruption as much as they can. Option four is self-manufacture or nearshoring. Self-manufacturing is definitely not the trend, but there are some people who still do that. That comes with its own challenges and complications. Nearshoring is obviously we've looked at quite a lot in this. I think one thing that would accelerate number 4, which is probably on the medium-term horizon, is right now the problem is that the robots that we could have employed in factories for the last 30 or 40 years are really basic and they're not very flexible. But if you drive those by AI, and if you make the robots like physically more dexterous and flexible, then there definitely is an opportunity to increase nearshoring. So probably longer term, we'll maybe all be retired by that stage, but I could see us going back to how it was pre-manufacturing in Asia, where basically you would have office, you would have logistics warehouse, and then you would have factory, all more or less on the same site. That can happen with technology, but we're not looking at that in the next 5 years, probably not 10 years. I'm nearly done. I've just about made it in time as well. There's a bit more information for me on this stuff if you want to get deeper. So there's a podcast I have, Playing at Business. There's about 100 episodes up on that. I have a LinkedIn newsletter, which, to be honest, I'm better at keeping up to date. So if you just search Steve Reece newsletter or Toy Industry Journal newsletter on LinkedIn, you'll find that. We're on about 6,000 subscribers. Whenever something changes in the space, I'll kind of update on there. But that's pretty much all I have time for. So one thing I would say is if you have questions, just because of the nature of how the presentations are structured, we're not going to do it here. But if anybody wants to ask me any specific questions or call me out on some horrendous error or political faux pas I made, I'm going to go and hang out over there for a while. So thanks very much for listening, and cheers. Thank you.